Time to have a look at market news now. Asian shares were mixed with the Japanese market leading the gains in that particular region. The Nikkei in positive territory, up 0.9%. However, when you look at what was happening on the mainland shares regarding China, we saw the Shanghai Composite down 0.9%. The Shenzhen component also following suit, down 0.9%. Things were also quite red when we look at what happened in Hong Kong. The Hang Seng down 0.6%. However, the opposite is happening in Europe with markets in that particular region in positive territory as investors wait that FOMC meeting tomorrow that we all have been talking about. But as we look at those particular markets, the FTSE 100 in positive territory, up 0.2%. German DAX up 0.4%, and the French CAC as well up nearly 0.3%. US futures at this point are flat. But to get into the actual detail around the themes playing around globally, we are joined by Nessan Nair from Sasfin. Nessan, thank you so much for your time.
Yeah, good afternoon, Tash. It's been a tough day. Tough week so far.
I can imagine. So on that note then, how's the JSE performing if it's been such a tough day?
Yeah, so second day of losses on the JSE. Not huge losses, I must say, though, but I think after the sort of strong start to the week that we've had for most of the year, I think a lot of people are a little bit concerned, about potentially another catalyst to take the market higher. We know that there's been lots of talk of stimulus. There's been talk now of inflation. There's concerns over the U.S.-China and sort of global China relationships, actually. And I think that's maybe, creating a little bit of hesitation on the part of investors. So that's why, this FOMC meeting is going to be crucial to lead the sentiment going forward.
How are you assessing the share prices of the banks, the hotel companies, the property companies, as well as insurance companies, especially when you look at their performance now versus the pre-COVID days?
Yeah, so I think that's been the highlight of this year. Last year we had a massive recovery thanks to NASPAS and the resource counters. This year it's been really about the recovery in those financial shares that you mentioned, the leisure shares, restaurant groups, the hotel groups, some of the consumer stocks, the retailers. All of these companies have actually recovered from their lows of last year, and the recovery has been quite strong and quite broad-based as well. The things didn't seem to be as treacherous going forward into 2021 as perhaps last year at this time we thought it might be. So I still think there's plenty of room for recovery, especially amongst the property companies that have really, bore the brunt of the sell-off. But in order for that to happen, we've got to win the war against the pandemic. And, of course, we're going to need to rely on the U.S. maintaining that very accommodating stance as far as monetary and fiscal policy is concerned.
Looking at the dollar rand right now, trading at 13.80. And, a week ago we were talking about the rand. So what's driving this retreat in the currency?
Yeah, so I suppose, when the rand strengthened to below 13.50 last week, a lot of pundits were calling it to the 13 level, but usually that takes place because it triggers a lot of purchase orders or a lot of stop losses, rather. Traders trying to cut their losses that were short the rand or short sold the rand, would need to buy them back. So I think the rand is probably reaching a little bit, of a stabilization territory, if I can call it that. Anything below 14 is generally, I think, an indication that investors are quite positive about the country. But, of course, one can't help but feel concerned that we might see a sudden spike in the rand should we not get a favorable FOMC meeting later on today.
Speaking of that FOMC meeting, what do you think will be one of the questions that Fed Chair would have to field? If you had to take a wild guess.
Yeah, no doubt about it. It'll be the topic of inflation. Remember, we saw inflation print in the U.S. now coming at 5%. I must tell you, I never thought I'd see something like that. But I also never thought that I'd live through a pandemic. So, it's first time for a lot of things, I think, for us. If inflation is able to sustain itself, then, of course, the U.S. Federal Reserve will have to act and start tightening up policy. So I think it'll be interesting to see whether he still maintains a positive stance. Indications are that this inflationary print that we saw the term is transitory. In other words, it's going to go away soon. And that would alleviate the need to change Fed policy from the very accommodating stance they have right now. But we'll have to just see, we'll have to try and read between the lines when he does speak.
That is Nesson Nair from SASFN talking to us about what we can expect. And of course, we will keep you updated with regards to that FOMC meeting.